All right, welcome back to Play of the Day. Owning real estate is one of the most sought after forms of passive income in the US, and it's pretty simple to understand why. You buy an asset, you invest into that asset, and then you find a tenant to pay you to live in that asset. And now you have a continual flow of passive income because people will always need a place to live, right? One of the greatest investments that you could ever make. But some of the downsides to owning real estate, I'm not so fond of. For one, I work 12-hour shifts, okay? I work a 12-hour shift. So I want my time when I have it. I want my time to myself. I want my time to focus on spending more moments and, the time with my family and my kids and my wife. And I want less time doing day-to-day tasks and working. I do enough of that as it is, right? And I definitely don't want to spend my time doing maintenance and all of the work that goes into buying a property that needs work put into it in order for it to be profitable for you. And I'm actually a part owner of a duplex in Detroit, and it's not being renovated right now. It's being used as a studio, but who knows, maybe in a couple years down the line, I'll turn it into a property to lease out. But my point is, I want to spend my time growing my finances and creating content, which is why I find investing in real estate assets in the market so fascinating, because it gives you a taste of what you're looking for if you want to own property. You get exposure to the real estate market without having to worry about doing any of the dirty work. That's the company's problem, right? I just buy into the business, you become an investor, you purchase the asset or the stock, and they pay you for it, or they pay me for it, right? And is there downside? Well, absolutely. Just like any other asset or investment in the market, there's always a sense of a certain amount of volatility, right? Is there more volatility compared to investing in an index fund or ETF? Absolutely. Which is why I invest daily into my index fund so that I have my foundation intact. This right here is outside of that daily investment. I'm building something that I think will be able to support me and my family for the rest of our lives. And it's my personal goal. And right now, that goal is to invest into real estate through the market to the point to where I am able to supplement my monthly expenses with the passive income streams that I earn from making those investments into assets in the market, or more specifically, REIT investments, right? Which is why the play of the day for today is Agree Realty. Now, I want you to bear with me here. Now, the ticker symbol is ADC. And before we get into it, let me point out that I am acutely aware, okay, of the condition of the real estate market right now. I'm acutely aware. Things are bad. But let me ask you to remember back. Okay, I just want you to take a little trip back. During the years of 2012, 2015, 2018, 2019, do you all remember the sentiment towards the real estate market back then? Business was phenomenal. The real estate business was doing numbers. Everybody was happy. Sellers were happy. Buyers were happy. People borrowing money were happy. Real estate moguls were happy. The banks were happy. Now let me ask you, did you hear anybody talking about the 2008 recession during those years? No, right? Did you hear anybody talking about how low stocks and assets in the market had dropped during those years? No, right? Do you know why? Because time heals all wounds, and so does market recovery. By the time 2011 had rolled around, the economy was already headed into another transfer of wealth. By 2012, Zillow estimates that homes here in the United States gained about $1.3 trillion worth of value during that time. By and large, nobody was talking about how much they lost in the real estate market from the 2008 recession. The world had just moved on. The economy progressed forward and left the bad taste of the housing market and collapse in 2008 in the past. New strides were made. New business deals were struck, right? New legacies and transfers of wealth were gained because the world and economy understood that no matter what, at the end of the day, we just keep going. We just keep moving forward. So recovery was never a question. It was inevitable. Now, I want you all to be secure in your investments I want you to be so secure that you cannot be swayed by someone on this app telling you to panic sell all of your assets and stop your investments because the crash is upon us and everybody is about to go back to trading and bartering for goods and services with favors. Right? This is the epitome of what Warren Buffett meant when he said, listen, be emboldened, be steadfast, be greedy when others are being fearful and afraid in the market. I'm not telling you not to strategize, right? I'm not telling you to invest blindly. But what I am telling you is to have a healthy level of fear of the dangers of the market, but balance that fear with an understanding and plan of action that will put you in a position to prosper when everybody else is living in fear and drowning. All right, so that being said, with that in mind, let's get back on track. Today, we're talking about Agree Realty, okay? We're going on a position that I have. Now, I have this position in my portfolio, and I have it in my dividend account. And this is another monthly paying asset that has dropped quite a bit. And it's an asset in the REIT sector. And if you go to their website, you can click on the properties tab and select any state you want to see the properties that they own in that particular state. And since I'm in Michigan, I selected Michigan. And you can see that they own an extensive amount of real estate here in the glove. They've got AutoZones. They've got advanced auto parts stores. They've got Bell Tire, Beaumont Urgent Care. They've got Best Buy, Big Lots, Burlington. Love me some Burlington. They've got property with Chase Bank sitting on it. Chipotle, Citizens Bank, CVS, Dollar Generals, Dick's Sporting Goods. Listen, the list goes on and on and on. Shout out to Erica Badu. They've been around for over 20 years, okay? And they have a portfolio with over 2,000 properties, with Walmart being their top tenant. So let's get into some of the stats. Just like all of the other REITs, they have had their asses kicked this year. On the year chart, they are down over 16%. Year to date, 23%. These numbers are going to be slightly different from the time that I looked this stuff up. 5 years up almost 4%, and max chart they're up 186%. But the financials, revenue growth has been nothing but solid over the past 5 years. You can see that. But when you get to the free cash flow and debt growth, that is where some people will turn up their nose. And you see that negative balance there. And it's been negative for some years for both. And right now, they're in a tough spot with inflation and interest rates tipping the scale. So let's see what analysts are saying before we go any further. Analysts are predicting an average of $73 per share. That's a crazy upside potential if it were to materialize. The lowest target they're saying is $64, which is almost $10 per share higher than what it is today. And the highest target they believe is somewhere around $80 per share, which means that they believe this stock currently meets the strong buy criteria. Not only does it do that, but it's probably likely undervalued, according to analysts anyway. But remember, these analysts are people just like you and I, okay? Their opinions are subject to scrutiny and failure just like anyone else's. So let's take a look at the dividend history. 24 cents per share, which comes out to about which comes out to about $2.90 annually. They've been paying out a dividend consistently since 1995, and it was a quarterly dividend all the way up until 2021 when they made the switch to monthly dividends, right? So listen, I understand if you have reservations about this one or any asset in the REIT sector for that matter. My goal here is to provide you with some insight, show you the moves that I'm making, and hopefully help some of you cultivate a healthy understanding of some of these assets, right? And some of these stocks. If you found any of this helpful, please do hit that like, share, subscribe. Doesn't have to be in that order. If you're not subscribed already, and make sure you share this video with anyone, someone in your family, someone who's looking to get involved with investing. I believe the safest investment for people who do not know anything about the stock market is just to find you an ETF or index fund and consistently invest over time. I think that is the safest bet for most people. But for those of you who are interested in building up something like a passive portfolio, then I would not shun you away from it, because I absolutely believe that when this is all said and done, and I have built up this portfolio, I think it's going to be one of the greatest decisions that I've ever made in my life, honestly. But that being said, listen, remember to invest diligently, but more importantly, y'all already know, invest responsibly. And make sure you stay tuned. I appreciate you all for watching. This has been Play of the Day. Make sure you tap in with me tomorrow. Check out my other videos as well. And I will see you all later.